Jeff, welcome to the In The Know podcast. Good to see you today.
Thanks very much for having me.
We've obviously just been talking about AI and technology, and we'll get into that. I think it's fascinating, but yeah, it's really good to see you. And I'm not the most observant of individuals, but I know you're based in Leeds.
Yes,
but your accent's not around here.
No.
It's not a Yorkshire accent.
No.
So I normally start the podcast by just getting to know the people in terms of their background and history. So,
Sure.
yeah. Tell me a bit more about yourself then, Jeff, your background, your history growing up.
Yeah,
Let's get to know you.
Yeah, so as you say, wasn't born in the Leeds area. I was born in California. And I was a military brat growing up, so we kind of moved internationally, including the UK, during my childhood. I spent a little bit of time in the US military in my early 20s, and then I was based in North Yorkshire and met my now wife. And I suppose like all these things happen. She gave me this kind of sense of that it's going to be a really sunny country. You know, this false pretense about the weather in the UK lured me in under that false pretense. So it kind of decided to move away from the US military, move into the UK financial services market, and my wife and I, 4 children later, 20 years or so later, here we are. But from a kind of professional background perspective, I've worked in FCA-regulated businesses since 2007. And I suppose really for me, the most important aspect, how I would characterize my career, is around kind of how can we innovate? How can we challenge the status quo? Most recently, I got involved with TFAS, the Financial Advice Service, which is a remote advisory business in 2017. And it was all about how can we provide a high-quality service to people across the UK, whilst doing it with as much digitally led advice as we possibly can, whilst maintaining that high quality.
Okay.
So yeah, that's kind of, I suppose, the background and the history.
Brief potted history.
Very brief. Yeah.
Well, tell me a bit more about TFAS then.
Yeah.
How did you find your way, I guess, to TFAS, and then your journey in the business, because now you're the CEO.
Yeah.
So just tell me about that journey.
Yeah, sure. So I started off in traditional financial advice as a qualified financial advisor, and very much in a kind of environment where it was endorsed and believed that the kind of paradigm was that face-to-face advice was the way forward, because it was a requirement when you're dealing with sensitive personal financial issues to build trust and to kind of really develop those long-term relationships. And I never really bought into that. I mean, I did it for a long time. And in 2017, I got a telephone call from a previous business partner of mine, and he said, listen, I run a lead generation business in the digital realm that's all telephony-based and places qualified referrals to financial services companies up and down the country. I know you've got a background in financial advice and running your own financial advice practice. Do you want to come together and set up what is now the financial advice service, and essentially bring both powers together, you know, the digital lead generation side as well as the remote telephony side, and set that up and build it? And I said yes. And so since 2017, what we've been trying to do, and have done fairly successfully in a number of ways, is get the synergy together between those two businesses, where we can really build high quality advice, build assets under management, build strong client relationships in a remote capacity, whilst also supplying both internally to the group as well as externally to the wider financial services market high quality referral service, where people are inquiring in digital platforms such as Google, etc. Making that initial inquiry, and then essentially there's a conversation with a member of the team in the Nzuzo proposition, and then what happens is a decision is made collaboratively with the consumer about the best type of advisor that they need up and down the country, with the right types of qualifications and background, etc. And some of those consumers are dealt with and helped by the financial advice service, and some externally. So that was the beginning of that journey. And again, with the theory that we're going to do it differently, we're going to do it better, we're going to do it more efficiently, we're going to use technology to the most benefit possible. And so that was kind of the early days. More recently, the group's built organically. We've not really kind of gone out to market and really shouted from a hilltop about who we are or what we do. But we've built up those two trading entities, and recently we also acquired, when Tenet Group went into administration this summer, we acquired TCS, Tenet Compliance Services, and rebranded as TFAS Compliance Services. So now we have those 3 different trading entities that focus in on the quality of the advice through the tenant compliance services aspect, and we provide a service to UK advisory businesses to help make sure that they're dealing with regulatory changes appropriately and that type of thing, alongside the other 2 propositions.
So you've got a number of different types of businesses. I know the feeling because I have them too. I'll ask you this question. You don't have to answer it. Which one do you prefer? Which one gets you excited?
Yeah, I mean, where my heart is, I suppose my where my qualifications sit, where my background sits, is in helping consumers through financial advice. And I suppose there's so much that's happened. At the time that I was getting into regulated advice was at the heyday of kind of post the 2008 massive change to the economy, the big crash, and also the retail distribution review, which obviously changed the requirements for financial advisors, and we saw this mass exodus from the industry as regards the number of advisors actually available to service the growing need. So I suppose I came in at a time where arguably there was more need for financial advice, less financial advisors that were there to provide it. And then in 2015, that was exacerbated, I would say, by what happened when George Osborne changed the rules in pension freedoms, and more people who weren't necessarily considered to be ultra rich actually genuinely needed to speak to a qualified advisor about what do I do with my pensions, what do I do with how do I decumulate my assets over the rest of my life, because it's my pension provider's telling me actually it's more complicated than I thought. I thought I'd just buy an annuity or whatever. So in answer to your original question, I saw that opportunity and the opportunity to genuinely help people to improve their situations, and not necessarily the ultra high net worth traditional advisory client, but actually the broader retail market in the UK.
Where do you think that purpose comes from with regards to helping people?
Really good question. So I think for me, it actually probably, it's getting a bit deep perhaps, but it goes back to my childhood. I was one of 7 children growing up. My father was U.S. military and then later defense contracting. And he had growing kind of diminishing returns as the number of the children that he had. I was the second eldest. And I remember my parents making decisions financially that even as a child, I was kind of like, why are you doing that? And the ability to, and what they really needed to do was take financial advice, and small changes to the way that they had dealt with their portfolios earlier on would have made a massive difference later in their life. And I remember that vividly from my childhood, and thinking that actually professional advice really can make a difference to people's lives. And as I say, not necessarily people who have inherited billions of pounds through trust planning, et cetera, in the past, but just run-of-the-mill people. And so I think that really kind of inspired me to want to make a difference.
And then, so you came to the UK, obviously, North Yorkshire. And when did you first get into financial services? What year are we talking about, so I can get some clarity around?
2007.
2007 was the year that
the year I entered into kind of the regulated financial services world.
Yeah.
So as I say, just kind of as the Lehman Brothers were getting ready to wrap
Great
up.
time,
Perfect timing. Yeah. And obviously huge regulatory changes over the next few years from the regulator, and lots of concern about the banking sector, and I suppose probably from a public sentiment perspective, lots of changes. When you had the BlackRock situation and people in giant queues trying to get their money out of the banks, and and so for me it was kind of an opportunity to kind of hopefully in the long term change that image of financial services and make it from a branding perspective. It's one of the things that I find really strange actually about the financial services industry is that financial advisors are thought of, certainly in the UK, perhaps slightly less so in the US, as a slightly different ilk than, for example, accountants or lawyers. And for me, it's a professional service that should, not just be perceived, but perform at that same professional services level. And so I saw an opportunity really to participate in the growth of that professionalism.
Where I'm interested to find out a bit more about yourself is financial advice, doing that remotely or traditionally, which is the preserve of many face-to-face. How can you build effective relationships with people on a remote basis?
Yeah. And that, I think that's the very first question we needed to grapple with back in 2017 when we started the whole thing. And I think the key is actually the exact same things as you would expect in a face-to-face environment. It's the old trust equation, so to speak. And it's making it very clear that the person's interests that are being served in whatever interactions are not the financial advisor, but the consumer. It's being reliable. It's when you say you're going to do something, actually following through with it. It's about coming across professionally and as the subject matter expert. I would say it's helped, ironically, perhaps through the COVID period when it became much more normal to have remote conversations, when kind of the likes of Teams conversations, et cetera, became more prevalent in the way people do business. But for me, it's just those basic fundamentals, and actually making sure that you're setting out the service that's being provided, the value that's being added, and following through with the things that you're committing to doing. And what we found was there was a kind of sub theory that there was going to be a cap, so to speak, in people at certain assets or levels of sophistication that wouldn't want to engage or be comfortable engaging. And actually what we found quite interestingly was by applying those principles, the exact same basic principles that any advisor in a face-to-face capacity should apply, that actually that was a false premise, and that actually people of higher net worth amounts were more than happy, and in actual cases, in many cases, insistent on dealing with situations in a remote capacity.
Really?
Yeah.
Because I would have thought if you are a wealthy individual, you've got, different types of businesses, etc. It's all, interlinked. They're quite happy as well to have remote advisors.
100%,
really?
100%. And we're seeing that grow, that emergence grow. We did historically, when we initially set up the remote proposition, see a little bit of a correlation from an age perspective. But I think with technology over the last 10 or so years, moving at a faster and faster pace, and more people of all age demographics engaging with smartphones and engaging with iPads and whatever, that expectation that you've got an app associated with your services, or that you're going to deal with things in different mediums, has grown in the public. And so that we found that demographic has actually shifted, and actually we now have clients in their 70s and 80s who are more than happy to communicate electronically, if we're sending through applications or fund updates, instead of using an application, using an app on their phone or whatever, no problems.
Do you think that's because we've shifted as a society in terms of what we do now with
100%.
Amazon, and we just interact with our phones, we interact online, we buy stuff online? It's
just
the
normal.
way we are.
It's just normal. It's how we do other things. And so if that's how we do other things, it's how we access, a lot of people these days, banking or insurance or other financial services, or just Netflix or whatever the service is that you're wanting to access. What do? You go on your phone or your iPad or your computer and you access it.
Do you still need that to build up that trust? Do you still need that person at the end of a phone or a Zoom call just to give people that assurity? So you still need some human interaction.
100%. So for us, it's about the balance between the two. It's about getting the right levels of efficiencies to support the best consumer journey as possible, but it's underpinning that with the human relationship aspect. And I think I have lots of conversations at the minute with businesses about the effect I think AI is going to have, for example, is a big one, and we could talk about in more detail. But and for me, AI and tech isn't there to replace the trust element. And I definitely think if you're looking at trends in consumer behaviors, that the public, and I can't speak for where we'll be in 50 years, but the public right now is not ready to say, well, I'm going to just trust a bit of kit to tell me, how I should move my funds around, or how I should, which type of drawdown I should move into from a income perspective, and what's going to guarantee me the right type of lifestyle and these important financial aspects of my personal life. So yeah, it's absolutely about them knowing that there's tech that's part of the solution, that's adding convenience and adding efficiency and giving instantaneous access to information and those types of things. But there's a human in the background that actually is there managing that relationship and available if you need to pick up the phone and speak to them, or to confirm kind of the details that have been expressed digitally.
And is this a growing market then? Because I would assume 2019 or 2020 COVID, that was probably things shifted quite dramatically, as you say. So is this now a growing trend? You're seeing more people
100%.
Wanting this remote advice?
And 100%. And we know that. We can qualify that because Because of our Inzuzo proposition, we have over 100 UK client firms who are performing financial advice. So it's not just our own paradigm that we're looking at internally. And we know that more and more and more of those are actually moving to remote service and providing, in some cases, complex or high net worth advice on a national basis without having to, have people based all over the UK. So we're seeing more and more of that, 100%.
Because we're going to talk about the advice gap. Probably this is a good segue into that, because I've had a number of people on this podcast. They've talked about the advice gap. Some people have said it's not an advice gap, it's a trust gap. So you start thinking, well, what is the actual problem? But if we look in its purest form with the advice gap, to you, what does that actually mean?
Yeah, in simple terms, for me, the advice gap is the difference between the appetite, generally speaking, of financial advisors in the UK, the appetite and or time or commercial viability of financial advisors in the UK to deal with a growing consumer trend of requirements to provide financial advice at the lower asset level. For me, that's the advice gap in as concise a way as I can say it. And I'd be interested to understand what you mean by trust in that regard, and maybe it's correlated to the potential for remote advice. But what we've been able to do by streamlining operational processes and integrating technological solutions and maintaining the trust equation through human interactions where appropriate is reduce the asset level and therefore start to taper into that advice gap and help more consumers and higher volume of consumers, because we're able to do it more quickly and more efficiently whilst maintaining margin, but addressing that lower end of the asset pool. I think there's a connection, and we can talk about it in however much detail you want to, but there's a connection, I think, with the intergenerational wealth piece as well. And I think there are a lot of financial advisors who are more than happy to deal with perhaps the top level generation, but there might be two sub-generations that don't necessarily hit that asset level. And I would say that there's two main problems there. One is that there's however many, I don't know the number, but it's however many billions or trillions that's going to be over the next period of time passed down to that next generation. And how do you have that relationship continuity of those people? But there's also the advice gap piece and kind of the reason why there's not an appetite to address those lower end consumers, despite the fact that in the future they will be the higher end consumers. So
sometimes I look at it and think, is the profession, is the sector? I always get told off when I say industry, so I'll say sector or profession. Yeah. Are we not thinking ahead too much? There is a thirst for asset growth. Yeah. There's a thirst for wealthy clients. But there does seem to be a missing link with regards to working with the spouses, working with the children, etc. But there does seem to be a missing link that we seem to be very focused on one end of the marketplace, but not another. Yeah, is that something that you can sort of?
Yeah, I think so, and I think there's a perfect storm situation which kind of is linked to the point that you make there. I think the part of the perfect storm is the average demographic of financial advisors in the UK, which I think the last time I checked was something like 57. Yeah. And so if you think about what their time horizon when that average demographic of financial advisors is considering, it's not necessarily where's the industry going to be in 5, 10, 15, 20 years. It's when am I going to exit from my business and how do I maximize the capital? Just, not to stereotype every financial advice business or advice principle, but I think if you're looking at this sector and you're saying, why aren't we necessarily as engaged with, as invested in, kind of embracing the change and where we're going to be in the future? I think that's, naturally speaking, that's part of the problem. And I think there's a real need to, as an industry, start driving more kind of younger financial advisors coming in that can help to address what is growing in this advice gap, and actually start thinking about where the industry is going to be in 20 or 30 years, not where it's how I'm going to exit and get the maximum value. You've also, in that perfect storm, you've had in particular before kind of the interest rate spike, the inflation spike, etc. You had a lot of private equity, U.S. American money that was coming into the UK and giving opportunities, I suppose, for fairly strong exits, and in some cases not necessarily in the right way, in my opinion. But so it's created this perfect storm where I would agree with you. I think that the sector that we're in is is not as forward thinking and future oriented as it necessarily needs to be. And that's not speaking for everyone. But I think the winners are going to be those, in the next 5, 10, 15 years are going to be those that are.
I guess the next question is, so what's the start of that journey then? So if you're an advice principal and you're thinking, okay, we've got clients that we work with on a traditional face-to-face basis, how do they then start to business plan for the next generation phase 2? What would be your sort of advice around that?
Yeah, I think first is deciding that's something that the business wants to do, and beyond that, the big step is looking at data. And I think it's an input-output thing. If and everybody's doing this, from the regulator to the big financial institutions, etc. So if you're a principal of an advice firm and at whatever size or scale, and you're thinking, actually, I want to increase operational efficiency, I want to think about the future, I want to think about how I can implement technology, the first thing is, how do I record data? How consistent is that data recording? How do I implement changes based on the data? What does that data mean? How accurate is it, et cetera, et cetera. So it's things like, do I have a digital-led CRM system that I can input data, or my team can input data in a consistent way, and then how can I actually look at that data and get it out of the system? Because I think common thoughts are, if you don't have that input at the outset, then actually being able to analyze it, being able to make it more efficient, being able to streamline things becomes incredibly difficult.
Yeah. Okay. So looking at your data's, they do now say that data is the biggest commodity that we've got anyway. So this has really got to be a focused decision on making sure that it's right for your business.
100%.
I'll ask this question then. It seems quite crude, but with regards to the commercial value then of remote advice, if I was a principal, I'm thinking, okay, is there value in doing this then? Because obviously you're chasing the high net worth. There's obviously higher assets, the more potentially you can charge. But again, we talk about the advice gap. We'll probably tack on the simplified advice as well. But if I was a business owner, I'm thinking, where's the commercial value? Is there commercial value in this?
Yeah, and the answer to that is without engaging with, and there's parameters here, and it depends on where you start and kind of where you're positioning yourself in that advice gap and the commercial reality of it. But the answer is no if you're not willing to engage with change and think about the future. If you're a traditional financial advisor who does a paper fact find and maybe can get a couple of fact finds and meetings in the diary a day because you're spending time driving down the M1 or across the M62 or whatever it is, and those efficiencies don't necessarily exist. And then you come back and you got a team of paraplanners and everybody's, you're spending weeks kind of pulling different information together and duplicating data entry and this type of thing. Then can you provide that same service to somebody who's got half the asset level and at the same margin? Well, obviously you can't. But the answer is yes, if what you embrace is so from a remote capacity, you can speak to people up and down the country in any walk of life. All you need is a telephone or a screen for a Teams call. So you're immediately cutting out a huge
travel costs and time.
So if you imagine you could speak to twice as many people, for example. Well, that's twice as many people in the same amount of time. So in theory, there's your 50% reduction of asset level that you could deal with. And you might say, well, why would I do that? And for me, the answer to that is besides the altruistic helping more people, I think it's about diversifying client books. It's about looking at the stickiness of long-term business and value, and it's about understanding. I suppose if you're the polar end of the spectrum and you've got 20 clients that are all kind of ultra high net worth clients, and one of those clients decides that they're going to go to a competitor, then the risk to the business is fairly substantial at 5% of your books just left. But if you're able to service and provide advice to more clients, then the ROI equation becomes more consistent, and you're providing that high level service. And if one client decides that they've decided to go to a competitor, then the impact is substantially lower.
Can you see firms having sort of multiple propositions there? So you've got your face-to-face for a particular preserve of client that wants that or needs that, and then you've got more of a remote or digital service for different types of clients, next generation.
Yeah.
So if you have the both, you're effectively catering for different ends of the market.
100%.
Yeah.
100%. And I think a big part, when I speak to firms these days, a big part of the challenge is expectations that have already been set with existing clients, for example. So, you might say, well, I've got these clients, and for the last 20 years, I've gone to see them face to face. And now for me to say, well, I'm not going to do that anymore, I'm going to do this, it risks a change, rocking the boat, changing the relationship and the dynamic. So, yeah, absolutely. I think one of the solutions we're looking at right now, as we kind of start thinking more and more about guidance versus advice, and where digital can come into play to help people more at the real low ends of the spectrum, i.e., I want to put some money in an ISA kind of level, is actually how do we get multiple propositions built in for different types of people with different types of needs, so that we can address those simultaneously.
If you look at a business is all just a bunch of processes that create an outcome.
Yeah.
So if I was an advice principal, would it be a case of looking at all of the processes that I have at the moment and looking to see what can be streamlined?
100%.
So you just look at your business and you analyze it from start to finish, everything that we do, and what can you continue to do that, or what can you improve through technology or through different types of innovation?
Absolutely. I would say that should be the next emergence from the data piece as regards to the steps of the journey, really. If you look at your data and you're kind of saying, well, actually, I've got a CSV file that I'm inputting manual amount values in, and from my paper fact find, from my face-to-face fact finds that I do. And you say, okay, actually, I've got the data here now. The next step is saying, well, actually, procedurally, process-wise, actually, how am I going about doing my job? And actually, absolutely right, thinking about it from a commercial, this is a business. What are the modules that essentially fit into that consumer journey? And what am I doing as an organization that will allow the efficiencies to be maximized?
Okay. Yeah. Well, so now I'm interested. Okay, so once I'm going through the process, I'm looking at everything. From your perspective, from the advice perspective, with the way that innovation technology and AI is taking off, where do you see the biggest change coming in terms of that sort of process flow?
Yeah. So where we are right now, is in products are live in the market, and what we're utilizing presently is the type of AI solutions that take away basic administration. Basic administration that is essentially either duplication or time-consuming review of X, Y, and Z in order to create Y. So very simply, for example, because all of our calls, all of our appointments, all of our client interactions are unrecorded conversations, that is instantaneously put through an AI algorithm. Within seconds after the meeting completes, we have a meeting summary that is accessible by the whole back office team and the advisor.
Do you have to warn a client that the meetings are recorded from compliance?
Yeah.
Do you just say this is going to happen? Yeah,
absolutely. Yeah, and it's just part of our opening kind of just an additional bolt on to the original script in our process, which highlighted that we record the calls. Yeah. And we've not. I can't think of a single instance where we've had any pushback on that, because it's essentially a value add. We'll be able to help you more quickly and more effectively.
Well, most call centres, you phone up and they say this call will be recorded anyway. So this has been going on for years. So this is just a slight tweak to that.
100%. Yeah, a slight tweak. And so so the information is pulled together through the AI. Immediately, we've got a meeting summary document that's produced. Immediately, information is pushed into our electronic CRM system, which needs to be validated. We need to cross-reference to make sure that the AI is correctly understood and translated the information, so that we've got a proper fact find. But we found that just those couple of things has cut out over an hour's time associated with post-fact find administration for the advisor. So you might have a roughly an hour kind of conversation, and historically you're talking about another hour of topping and tailing and kind of summarizing and making sure that you've got the right language and you use the client's language as part of the objectives. Whereas now that's all pulled together concisely, sense checked, and then uploaded. And what that lets happen is when our advisors are having multiple conversations a day with different clients, and then you're looking, we might have seating scheme information comes back a week or two later from the providers, and we're looking back at the original conversation. We look at a quick summary that didn't take any time to produce, and you remember, oh yeah, this is what we were talking about, as opposed to having to re-listen to calls or to review notes and that type of thing. So it's created massive efficiencies just in those. And that's live. That's happening now. That's not the future. That's what's happening now.
And is it working? Because
Yeah.
sometimes with new technology,
Yeah.
we've invested in AI. We're going through automation. And when it works, it's great. But when it doesn't, you get really frustrated because
Yeah.
sometimes it pulls the wrong data
Yeah.
or it summarizes the wrong information on a call. And then
Yeah.
you have to go back and then undo things.
Yeah.
So it can be frustrating. But from your perspective, where you're at in terms of the accuracy,
Yeah.
what percentage are we talking about? In terms
You're
of
talking over 90% accuracy, and
9 out of 10,
yeah. So there's still and we're fairly early on. So the journey we went on from an AI integration started at the beginning of this year. We were thinking about it last year. We decided to really engage this year, and we engaged with 2 or 3 relatively new organizations that had launched AI propositions to help us. And what we discovered through that was there was a lot of work that needed to be done to make the right changes and to get to a point where it was actually we're spending less time, not more time in that process. And then we met the company we currently use, which is called Aveni. And the thing that I would recommend to any business is thinking about engaging with an AI company is look at their track record historically. Are they someone who's only emerged into the industry post-ChatGPT and is kind of grabbing onto the growing trend and noise, because there are so many out there now, and that are essentially they're learning as you're learning. You're almost teaching their algorithms as opposed to them having a solution for you. And Aveni actually is about 6 years old, and it's been working with some of the biggest financial services companies in the UK.
So they've got a background
So
in
they've got a
the
background,
industry. Right.
and this was really important to us. And I think why, when we started working with them, it was quite quick to get to a point where the outputs were highly valuable and low error. And I don't think they would say, and we certainly wouldn't say that it's 100% perfect, but nor does it need to be to create those efficiencies. There needs to be that sense check, that just kind of read through and push the information in. Yeah, we're happy with that kind of thing. So we've found the accuracy levels to be really, really great at this early stage. And I suppose the second part is, of course, where we're going with it. And again, this is now, but we've not fully completed the integration just yet, is around quality assurance pieces. So kind of historically, I would say even presently, the traditional model from a regulatory perspective is, okay, what oversight are you providing on your advisors in your firm? How many files are you looking at? How many observations through your T&C scheme? These types of things, obviously. But you can only do as many as you have time in the day and employees that are dedicated to that T&C support or that oversight. Whereas integrating AI and listening to every single one of those calls and actually having KPI indicators and data-led metrics that indicate whether the client had potential vulnerability, or whether or not we sufficiently delved into contradictions that were provided during the attitude to risk conversation, or a number of different other things. And then being able to see that data for every single call, and then be able to more thematically and selectively identify where humans should get involved to address potential training gaps or needs in the advice process. Again, it gives us a huge degree of comfort that we're moving towards increased efficiencies on the quality assurance piece to make sure that our clients are getting the best service possible. And we suspect that in the long term that PI companies will kind of get a hold of this as well and take into consideration companies that are forward thinking, coming back to that, how do we make this commercial? PI has gone kind of through the roof in the heyday of all the scandals that you see in the papers over the last decade or so. And actually, if we can say, well, actually we record and put through an AI algorithm 100% of our calls, and we identify where we think that there are issues, and we address those preemptively to make sure that it doesn't lead to complaints or bad outcomes. For me, that's what we're starting to engage with now, and that's where I get really excited in wanting to grow the proposition in the long term, just to have those foundations of security.
Is the regulator, the FCA, they'll be looking at this seriously anyway, but can you see the advantages for them as well in terms of, monitoring the industry? Because there's a lot of 100%. Advisors firms out there, so I guess it would be easier for them just to spot check and see. Yeah.
And I think, admittedly, the bang, the drum that the regulator's been thumping for the last few years is that they want to be data led, they want to be digitally integrated, and whether you're looking at return data that needs to go back to the regulator or whatever, 100%. And I believe it was only a couple of days ago that the regulator came out with new stats about the percentage of of firms that are actually engaging with technology now in the AI space, and I think they're recognizing that is growing and growing, and I think that they will come out with more specific kind of regulations around the due diligence that needs to happen and where the data is being stored and all these types of things.
Because I guess they need to make sure that they're catching up, because obviously technology just goes, as we were talking about earlier on, it just goes through the roof in terms of the scale. So I guess they need to make sure that they are doing their bit to keep up and keep pace with all the changes.
And I think, and I don't want to scare anybody that's listening to this podcast, but if I was the exec at the FCA, what I'd be thinking is, how can I increase the penetration and oversight of the financial of the industry and the sector that we're in? And if we're thinking about how we can listen to more calls and produce a better oversight of our organizations using AI, I would imagine that at some stage that'll occur to the regulator, and that there's a propensity for technology to be more directly connected between the regulator and firms providing advice.
So you can see the positives with all this change, and you can see the efficiency drives. You can see better outcomes, better due diligence, checking regulatory. You can see all the positives. Do you ever sit back and go, what are the negatives here? The things that we don't think about, because we tend to look at the positives, don't we? We tend to think about, it can change this, it can do this, it can do that, without sometimes, and I put myself in this category, thinking about the consequences of that, because all of these efficiencies will lead to less people. And sometimes I think about it and go, oh, that could be a challenge if we're creating efficiencies and we're doing this. Sometimes I think we just run ahead towards this and think this is going to be great, without sometimes thinking, okay, well, what are the impacts on that? What are the impacts on people? What are the impacts on clients? Because we just tend to look at we can do this, look at the data, look at the efficiency, we can do, great, and then you're off. Yeah. And sometimes I think, hang on a minute, what about some of the people that may be affected by this? I don't know if you ever think like that.
No, I do, and I think this arguably this particular point stretches far beyond just the sector that we're talking about right now. And I think if you look at any moment of innovation in kind of global history, it will cause change, and change is sometimes good for some and not necessarily good for others. And I think we'd be kind of naive to say that there will be no change to traditional roles, or to in 5 or 10 years time, if the tech exists, then and it can do to a high standard X, then why would you have somebody doing X? But what it also creates is opportunities, and I think it's coupling those two things together. And I think if we zero the question in on a financial advisor, for example, as opposed to perhaps administration or support staff in a firm, and you say, well, a lot of the advisors I speak to, their concern is, well, based on how fast AI is moving and how fast technology is changing, at what stage are financial advisors redundant? Essentially, a person can speak to a bot and they can get high quality advice, etc. And I think it comes back to what we were talking about earlier as regards trust. And for me, where we are now is it focuses in the mind into where's the real value that a financial advisor provides to a client. Is the real value a technical calculation on CGT for betting an ISA or whatever? You can do that on a calculator. You can get a computer to do that. It's an algorithm, etc. Or is the real value in the trust equation, and actually them knowing that in the background there's a human being that they connect with, that understands them, that's got that emotive connection with, this is really important to me. When I retire, I want to be able to do this, this, and this. And and I think that's where that's what this kind of incredibly fast-paced change should focus people's minds on, is actually where's the value in what I do, and how can I do more of the thing that's giving that value.
I think the human connection is so important.
So important.
Because I think, if I'm buying something from the internet or Amazon, it's a product. Yeah. And I'm not that attached to it. Yeah. But when it comes to my finances and my family, that's a different kettle of fish.
Totally different.
So whilst you can have all of the streamlined processes, you still need that trust-based relationship for me to be able to, you're helping me make that decision. Yeah. And I think it's trying to unlock sometimes what goes through my head. Why I think like I do? Yeah. How can you, challenge that? Mm. And that is, I think, the strength of a financial advisor to go through that.
100% agree. Yeah, I mean, another analogy is it's currently common tech. You can take a photograph of your fridge, and you can ask AI to tell you what you should cook tonight, or give you 2 or 3 different ideas based on the ingredients that you've got, because you fancy a certain type of cuisine, and it'll give you some ideas, and it'll probably be fairly accurate. and depending on what kit you're using, and then you can cook it and you can eat your dinner. Worst case scenario, it's told you to put the wrong ingredient in, or it's whatever. It's not necessarily going to end your life, and it's kind of cool to do. But as you rightly say, if you're talking about things where, well, I want to be able to help my child buy a house, and it's got real tangible either benefits or whatever, or I want to be able to retire at this age as opposed to that age. Do you want to take a photo of your fridge and have the conclusions drawn? Or do you want to have somebody who really knows what they're talking about, who's using tech to supplement the efficiencies, but actually is looking you in the eye and saying, I believe in this, and this is the way we should go. And it's that's the human relationship bit for me that is unlikely to change at any point in the near term.
Yeah. I think it will change at some point, because who knows in the next 20 years,
Yeah.
But I think, you have to work really hard to create that wealth.
Yeah.
And then just to think I'm just 2 clicks and that's it. I'm not like that. I need to know I'm doing the right thing.
Yeah.
But it's also about unlocking perhaps me or thinking differently about why I should be doing certain things as well. So I think that the advice sector, I think it's a wonderful place to be, because you really are helping people.
Yeah.
And it's a great thing. But I do think there's a lot of firms still stuck with, the paper files, etc., doing the more traditional things. That will diminish in my view. So you do need to get the marriage of the new technology, the innovation, and the AI, and also look at different categories and different groups of people, but never forget the human relationship side, that human build. That to me, I think, is the core focus moving forward. And everything's just the periphery of, we're just more efficient. We can do more things, which is great.
Yeah.
So I think it's positive, but who knows in the next 5 years? In fact, if I was going to say to you, where do you see this sector in 5 years?
Yeah.
What would it look like, do you think?
Yeah. Well, let me just jump in with a slight aside first,
okay.
if I may. So, and I won't be able to quote where I was reading this, but I looked at some recent statistics about the demographics and the engagement and trust factor with technology. And what I was reading was that actually the younger population, which you might naturally think is more happy to jump on an app or happy to make decisions using technology, etc. Whilst their engagement levels are higher than perhaps the older generations, their skepticism is also higher. And actually, I think you've got perhaps generations of people who haven't grown up with smartphones or different bits of kit, who kind of see technology, and they might be skeptical to engage with it, but when they do engage with it, they trust it more. And you've got a younger generation who's grown up with that tech, and actually they're looking at that tech with skepticism, because they actually know that there's a huge plethora of it. And what are you doing with my data? And why this? And why that? And why that? And so it's a really interesting.
So
trend.
Where does that come from then, from the younger generation?
I think
I thought there would be a lot more trusting the new tech.
I think, and I'm getting a bit deep here perhaps, but I think it comes from the older generation almost looking at tech as kind of this new invention, right? So talk about people who were born before people would commonly have a computer in their home or whatever, and didn't necessarily grow up with that. And then you're looking at people who were born over the last 20 or 30 years, where smartphones existed their entire lives, and everybody has a mobile phone by the time they're whatever age, and this type of thing. So there's not a magic element to it. It's just that's the way the world works. And so then when they're looking at that tech, they're saying, well, there's lots of different types of tech. Are you an Android user? Are you an Apple user? And why this and why that? And I think there's a higher degree of scrutiny of the tech just because it's more commonplace through their childhood. That's my view anyway. But I think it kind of applies, I think, to a degree to the question that you asked me about where are things going in the next 5 or 10 years. And I think you will undoubtedly see incredible innovation that will just kind of blow people's socks off, I think. But I think we'll also see substantial scrutiny of that, and I think we'll see more regulation. We'll see stuff emerge that will naturally be bad elements of this stuff. Whether it's videos of politicians that you can just use your home computer to create, and you can put out on social media, and suddenly you're looking at an avatar of the president of the United States making a speech about wanting to drop a nuclear bomb in Iran or whatever. Yeah. But it's complete fake news kind of thing, and you'll see more and more availability of kind of being able to do some really powerful things at really localized levels, which I think does need regulation. It does need serious consideration. It does need people to think really hard about, and I think that comes into that trust piece as well. How much do we trust? If you're scrolling on social media, or you're watching the news, or you're watching this, how much do we trust the information. And I think there's less trust now than there was 20 or 30 years ago, partly because of the emergence of technology and the heyday of kind of this information age of information coming from so many different sources. And I think that's why I believe that the human element is still going to be incredibly important in the next 5, 10, 15, 20 years, irrelevant of the additional tech, because it's very different trusting a robot, so to speak, than it is trusting somebody having a conversation with you that's kind of got a reputation, that's got a qualification, that's kind of interacting with you on a human level.
Yeah, I'm just trying to resonate. It does resonate because my son's 20 and he's not on social media really. He does a little bit, but he's not, and he grew up, with smartphones. And when I talk to him, he's more skeptical than I would have imagined. I don't think that's come from me. I think that's just come from him. So when I have a conversation with him at the dinner table, he's quite well educated in terms of what's going on with the recent political developments in the US or the UK, and he seems to see through this tribalism. Which is because it's either you're red or you're blue, you're this or you're that. And he seems to think there's more to it. And I always think, where does that come from? So it's interesting because I think at the moment we are just bombarded with fake news or just news which is like
from everywhere.
And you just what is the truth anymore?
Where
do you go to even find the...
Which naturally creates skepticism. And I think, if you look back 20 or 30 years and how did people get information, and they'd open up a newspaper or whatever, and they're getting it from that source. Whereas now there's so many sources of information, and it's just boggles people's mind, and it just creates that skeptical kind of mind frame. I didn't have that in my childhood, but my kids absolutely do, and I see I have the same observation of my children.
It's crazy where we're going, isn't it? It
really
is
is.
Madness.
And
in terms of where we're going with regards to the future, are you fairly confident about the economy, the budget, stuff like that? Because I think from what we've seen is this year's been a tougher year. People have just been holding back a little bit because we've had some uncertainty. But what's your view of the next sort of few years from the economy perspective?
Yes, it's kind of tackle that question from two different angles, if I can. So because we have a fairly substantial digital footprint through our lead generation arm of our business, we're essentially seeing the activity in platforms like Google, et cetera. What are people looking for? When do they look for it? Why do they look for it? And then we're speaking to them as well, and we can really have that connectivity to the consumer base in the UK. What we see is we see patterns of behavior. So when there's substantial changes, like there's a budget that comes out, or there's a US election, or a UK election, or whatever, we see shifts in consumer behavior, oftentimes driven by, in some cases, anxiety, for example, which creates a prevalence of, I need to underpin this anxiety with financial advice. So we see surges, for example, after the budget, we saw a surge of people searching for financial advice in the UK. And understandably, considering the substantial changes that were made affecting things like pensions forming part of the estate, or from a business perspective, increasing the percentage of employer national insurance contributions. And so I suppose, for me, one answer to the question is that it really affects people, and what we've noticed kind of post the increased spike in activity that came out just immediately after the budget is there's a lull right now. There's we feel like the kind of consumer sentiment right now is kind of, we're not really sure. We're not really sure where this is going, and we're not really sure whether we should commit left or right, and we're kind of in a holding pattern right now. And I suppose that also resonates for me as a business leader, and also for a lot of other business leaders that I'm speaking to, because obviously this is Rachel Reeves' first budget not done by a Conservative Party in a long time, and some fairly substantial changes. And if you look at the forecasts, they're not particularly interesting.
They're not sexy, are they?
They're not sexy.
Really?
They're
really
not.
Are just
they're
like
the opposite.
1% or
And you kind of say, like, what are we doing? Like, what? This isn't exciting. Like, what are we doing? And I suppose that creates, when you've got a consumer dampening and you've got a business dampening, it does, in my view, it doesn't necessarily bode well for investment. It doesn't necessarily bode well for if businesses are making decisions about recruitment plans for next year and that type of thing. Short term, I'm not hugely optimistic about kind of the climate, the business climate in the in the UK as a result of those things. But I think with all change comes opportunity.
Yeah,
and
we need to innovate.
We need to innovate,
Yeah.
and I think that's the second big point that I'd like to make in response to your question. The opportunity to innovate in the face of essentially margins being hit with additional overheads in the form of taxes and whatnot, which obviously a lot of, in particular, SMEs and in particular in certain service sectors and things like that have been hit really, really heavy by this reduction of the band for
It was
employers.
cleverly
And I
done,
see-
that.
Very cleverly done.
Very cleverly done.
Yeah, it doesn't,
very annoying.
doesn't
as
hurt
well.
the working people. Well, I'm a working person.
Yeah. I phoned my accountant and said, "How much is this going to cost me?" And he told me. I was like, "Oh my god!"
Yeah, it's not small
because it's clever. Because
very clever.
It's a small percentage, but they've reduced the band.
Yes.
And then effectively they've said, right now it's business owners. It's down to you to manage this. So we now have to make those decisions.
Simultaneously increasing the minimum wage as well.
Yeah.
So political opinions aside, it hits businesses.
It does, yeah.
So it's a perfect storm of realities. So for me, the only way to address that is we can only control what we can control. Besides grabbing a banner and standing outside Downing Street,
It's not going to work.
Not going to work.
There's a petition going on, isn't there?
I've seen it, and it's I think it's well up into the seven figures now.
It was about 2.5 million last time I looked.
Yeah.
I mean, I didn't complete it because I thought, well, what? He's not going to call a general election anyway.
Yeah.
But I looked at it and I thought, well, okay, fine. I think it's just people having their voice saying, hang on a minute, what's going on?
Absolutely.
And I think we do. I looked at different economic reports, and the one thing. There's a particular person I follow, and I think he's always pretty good. Actually, he's very balanced. It's non-political. He's basically saying for the UK to thrive, we need to innovate. We need to use technology to increase productivity. So all it's doing now for me is focusing my mind to say, well, actually, we need to do this probably more quickly than ever before
100%.
to increase the profitability, to increase the margins. But we need to increase efficiencies. So let's use the technology to do that, because now, to run my business the same, it's tens of thousands of pounds more next year than it is this year.
Yeah.
So we've got to do it.
When you
so I think we have to do that anyway.
Yeah, no, absolutely. And I think anybody who's not thinking about that needs to start thinking about it, to be honest, because there's all the niceties around being able to address the advice gap and being able to service more people and that type of thing. But then there's just the practicalities of running a small business, an SME, or even, there's a number of very large businesses that have written to the Chancellor recently to say, actually, this is going to really hurt. But yeah, it's that innovation piece. It's actually where can the efficiencies come in? It's leveraging the emerging technology to maintain the existing margins.
If you look at TFAS, where do you want it to be? What's the vision?
Yeah. So we see ourselves as a connector in the UK of genuine financial planning needs and businesses that provide those needs with the overlay of quality and keeping those businesses safe in the way that they do it. And so what we want to do is we want to go out to market, and like I said earlier, we've never banged the drum. So we want to start banging the drum because we think that the way that we do it is right for the British public. We do things in a technologically driven way, but also with those kind of safety guards put in place. And so where we see things is essentially doing more of the same and having a bigger impact on the UK market. And we'd like to be a brand that when people think about, oh, do you know what, I need some financial advice, where should I go? We'll go to the financial advice service. We intentionally had when we designed the logo and the name and thought about the brand that we wanted to create in the long term. We wanted it to be simple. What do we do? Well, we provide financial advice, and whether it's providing financial advice ourselves or helping people to get financial advice outside of our group, we're the financial advice service.
And do you consider yourself as an entrepreneur?
Absolutely.
Yeah.
Yeah, absolutely. I mean, that's one of the things I should say as well that got me excited about getting into financial services, because I saw the opportunity. I saw the opportunity to help people, but I also saw the opportunity of a shrinking advice market and a growing advice need. And from a commercial perspective, there's a supply and demand reality there.
It's huge, isn't it? You've got millions of people who need advice and not getting it.
Yeah, and a lack of interest. We almost need a really big film or something that you've got these films about lawyers and whatever going through the last decades or whatever that kind of creates that sexiness around the appeal of becoming a lawyer. Where's the equivalent in our
Not
sector?
quite the same, is it?
Maybe not. Yeah, I think of the Ozarks, perhaps, and it's not. That's not a good example.
I was just thinking about that. Who would be the star people in that? I think the sector is going through a lot of change, and we do need to attract new people as well, because we talk about an advice gap. There's a gap of new people coming into the industry.
And if you fast forward in time, that's arguably the biggest risk to the sector. If you think about the proportion of people who are leaving the sector versus the number of people who are coming in, it's diminishing. It's not healthy.
No, it's not. So we need to do more. And I guess with regards to the future, we've talked about that. We've talked about AI. There's lots of things which are happening, which is great. Where do you see simplified advice fitting in? Because we've talked about the advice gap.
Yeah.
I've read and I've spoken to people about the simplified advice, the advice guidance boundary review, which is happening. Do you see that as an accelerator to what you're doing as well, and
100%.
this could actually help?
Yeah, I do. I really do. I think the regulator could be a bit more helpful in the speed that they give guidance in this space and structure, but I think it's going to take brave businesses to engage with this space, and I know that the regulator's got kind of a sandbox element, and they're kind of open to a degree of engagement from innovative businesses. But I don't think in the very short term that we're going to be able to get anywhere near addressing a healthy level of the advice gap without more technology-driven solutions and kind of a lighter touch advice process whilst protecting consumer interests. So for me, it's something that we are very much heavily investing into, and looking at actually where there's relatively simple needs, which a lot of people that we speak to through the Inzuzo proposition now do have simple needs. They might have accumulated some money in savings, and they've heard from a mate at the pub that they should really be investing that because they don't need it and they want to use it in the long term. But where are they getting financial advice if they've got £12,500 in a savings account? It's a tricky one. Whereas actually, if there was a really slick, really streamlined proposition where they're getting a light touch of advice that's giving them the right kind
people
of balance,
like you,
the right balance of guidance and advice, is giving them the right options and tailoring that. So that is a space that we're very interested in the near term.
Yeah, I can see you're really passionate about what you do. Yeah,
100%.
And helping people, because there is a mass swathe of people who are underserved,
and I am passionate about it, and it is altruistic, but also is a huge commercial opportunity, because actually there's many billions of pounds of investable assets that are sitting in a space that are not being addressed, and if somebody could crack it and do it the right way, then it's helping a lot of people, and it's also helping. We were talking earlier about the economic outlook and the budget and whatnot. It's helping people end up in a better position and growing the economy, and giving people more confidence. So
yeah, I think buckle up, enjoy the ride.
Absolutely.
Okay.
Yeah.
One final question then, Jeff, which is my magic wand question.
Okay.
Here we go. So if I was to give you a magic wand, and this magic wand will give you one wish, you can wish for anything.
Okay. Oh gosh.
Apart from, you can't wish for more wishes. All right.
Yeah, and I can't change the weather in the UK.
No. It's limited power. What would you wish for and why?
Okay. Really good question. What would I wish for and why? I think I would. Oh gosh, I really should have pre-prepared for that one. That's a huge question.
It is.
That's a really
That's why I never tell people.
It put me right on the spot. What would I wish for? It's too small. I keep coming up with ideas in my head and they're too small. I would wish for give me a second on this one. This is
it's deep, isn't it?
This is deep.
Yeah.
This is deep, and everything I'm coming up with sounds too small, to be honest with me. Yeah. Is that too political?
Go for it.
So I think if there was one simple wish that could, I think in one fell swoop, sort out a lot of things for the next decade plus, not just necessarily localized to the sector, but certainly across the UK overall. I would wish for a substantial reduction in taxation, because I think that would, done the right way with the right OBR, et cetera, it would substantially stimulate growth, and it would change consumer sentiment, it would change business sentiment, and we'd get excited about something for the future. And I think so much rides on our view of the future and what we stand to gain or not. Where I think people and the nature of people is we're all on a journey, and where are we going and why? And that, and I think if we had a lower tax environment in the UK, substantially lower, then I think people would take more pride in what they do. They'd work harder. They'd get a bigger chunk of the effort and energy that they're putting in. Businesses would take more risks. Investors would put more money in. Would create more and more opportunities. Innovation would move faster. And I think it would create a really exciting place to be, as opposed to, as we were speaking about earlier, based on recent budget and the economic outlook. Put a lot of money out there during the COVID period. We, it's been huge kind of quantitative easing and everything, and inflation and war here, war there, et cetera, and whatever we want to blame it on, where we are right now just isn't very exciting. And if we could reduce taxes substantially, and we could then say, what actually the growth opportunity is this, that'd be a pretty exciting place to be.
Yeah, it'll give people more purpose.
Yeah, absolutely.
Good answer.
Oh, thank you.
Good answer,
That's a tough question, that one. That's a tough question.
That's great. Is there anything that you want to pick up on now, mention before we finish the podcast?
No, I think just from my perspective, thank you very much for having me on, and it's been really enjoyable. And thank you.
Jeff, it's been my pleasure. Thank you very much.
Thank you.
Cheers.
Cheers.